Welcome to Real Estate 360, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate 360, Tom K. Wilson.
Welcome. Do we have a show for you today? We have not one but two great guests that I know you're going to enjoy. We have Michael Morrongiello, who has come down here from Marin, who is the director of the Bay Area Wealth Builders, real estate investment organization, one of the premier and longest-running real estate clubs here in the Bay Area, who has great guests indeed, like John Schaub, who comes out periodically. John has certainly been an investor for since the 70s. He's written several books. The most popular one is Building Wealth One House at a Time. He's helped thousands of people get started in making money and building wealth by doing little deals. You don't have to go to and do great big deals. So that's an approach that he has taken. He's had a lot of experience with different kinds of products and has filtered out what he thinks works best for most people and for him. And he's a great educator. He's given many, many classes as well as the books over the years. And in fact, he's coming out here this week. He was, if you missed it, go listen to the podcast from last week where John spoke mostly about fundamentals. We're going to talk today a little bit more about the current market and things you might consider doing differently today than before. And if you are listening live as opposed to podcast, he'll be in town at Bay Area Wealth Builders for tomorrow night on Thursday. And he will also be giving a full one-day seminar on Saturday, which is, what's that date, Michael, the 9th?
Tom, that's going to be Saturday the 19th of April, down at the South San Francisco Conference Center.
So it's great to have John back on the air with us this week. Welcome, John.
Thank you. It's good to be here, Tom.
Well, we appreciate all the listeners being here today and listening to our Real Estate 360 program. It's your number one source of all of your real estate needs and education. We're broadcasting from the number one business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom K. Wilson, your host for the Wednesday edition at 2 o'clock of the Real Estate 360 that comes to you daily, Monday through Friday at 3 o'clock, and also on Wednesday and Thursday at 2 o'clock, along with my co-host, Joe Kuchera and Lori Graymont, who have guests every week and different topics all about real estate and real estate education. So many resources around here across the country and in the Bay Area that you really should take advantage of. Education is certainly critical. You certainly don't want to take $60,000 worth of boot camps and never buy a house, which some people do, but some education and staying current because things do change, and that's part of what we're going to address today. If you can't make the live show, you can catch your podcast on RE360radio.com, and you can catch my programs on TomWilsonProperties.com or on iTunes or on YouTube. We have also a newsletter on economics and how it affects real estate that you can go to TomWilsonProperties.com for. And it comes out once a week, gives you a nice quick read to summarize what's going on in the world out there, which we've now learned is certainly integrated a lot more tightly with and symptomatically and as a leading indicator with real estate. And it really is important more than ever to understand what's going on in the world of economics and politics if you're investing in real estate and want to get the timing right. We also have a report on how to choose the best metro and product to invest in, and we always welcome your questions at any time. So let's get on to the program here with Michael and John. John, again, thanks for being back again for a second week with us. And I'd like to talk today a little bit about the marketplace. And I guess the first thing that we can all say together is, whew, what a ride this has been the past few weeks. Now, for someone like you who mostly invests in long-term holds for cash flow, it's not quite as big a deal, is it, as those who were trying to do short-term investments and or maybe went into speculative cities and on the maybe I think sort of someday it might cash flow, but didn't and crashed. So what are your thoughts about this wild ride we've had the past several years, John?
Well, I tell people if they like roller coaster rides, they're going to love real estate. I've been doing this for 40 years, so I've been on a lot of roller coaster rides in these markets. And what you learn it is not so much about what the market is doing. It's about how prepared you are for the market in any one day. That doesn't mean you should sit on all your cash all the time and never buy anything. You have to buy things, but you have to be wise enough to know when the markets are overheated. And you can tell that if you're in the market. You can tell how much competition you have to buy properties. You can tell that people are paying way too much for properties sometimes, and you have to know what properties are worth, of course. But I always look at the cash flow a property will produce because I buy houses that will rent. I don't buy $1 million houses. I buy houses. The last one I paid $340 for, but I buy houses that rent and give me a certain percentage return. And when I can't get that percentage return because prices have gone too high, then I know we're nearing the top of the market, and I do start accumulating cash, and I do get safer so that when the market turns the other way, even though, California many times doesn't go down, it just kind of gets level. I've been studying the California market and been out there for 40 years now, so I've ridden through a number of, I've owned property in Sacramento and Tahoe, and I have relatives all over California, so I know that market. So sometimes it doesn't go down, it just gets flat. But when it gets flat, people get caught, and there's a lot of opportunity. So you just want to be prepared to take advantage of that opportunity, and knowing how to buy, and knowing how to buy without going to a bank, and knowing how to buy without having a lot of personal liability gives you the ability to buy in these down markets when others can't buy.
What information and resources do you use, John, to what are the leading indicators and metrics and things that you watch to tell you that maybe you shouldn't be buying in this market now because it's topped out and maybe you need to look at another market?
Well, first of all, I don't believe anything I read in the newspaper. I've been interviewed so many times by newspaper reporters, and they print exactly what you say. So if they call somebody else, they're going to print exactly what they say, I assume, without doing any double checking. So don't believe what you see in the newspaper or Money Magazine or even Forbes. I mean, these are good magazines, but you're reading something that a reporter wrote trying to sell the magazine. And most of the time they don't own any property. My number one metric is my rentals, how full I am, how stable the rental market is. Are people leaving to buy properties, or are they staying put? Can I raise my rents? And I look at the ratios of rents and prices. I look at the availability of credit. And this last time the crash was caused, of course, by lenders making terrible loans. Well, if you see that happening again, that's a sign. It probably won't happen the next time because these recessions all tend to have their own personalities.
Yeah, probably not just the same, right?
That's right, because we just had a credit crash, right? We're probably not going to repeat that one, but 86 was different, 81 was different, 73 was different. So all these things have different reasons that they happen, and sometimes it's government intervention, sometimes it's a war. There's a lot of different things that can really affect the real estate market. So you just have to stay tuned in, and of course, your market is going to be different than Detroit. Your market is going to be different than any place else. So you have to know which market you're buying in and understand the ratios in that market and be tuned in to both the rental market and the sale market, and then you'll make good decisions.
I think a lot of new investors, if there's any one thing that I try to tell people who are starting is that they want to know what's the market doing. And the first thing I say to them, well, first of all, you have to understand it's thousands of submarkets. And even in the same geographical market, you might have totally different things going on in one price group than another price group. And I think most people don't understand that. It's not just across the street or not, but it's different markets have different timings, and you don't have to go very far to get quite different results. And what I'm hearing you say is that maybe the first thing to pay attention to is what's going on right around you, rather than read the Wall Street Journal about some global thing, which you need to know too. But what's going on right around you? What's happened to the rents in your area? What people are buying, or how's the supply demand of houses where you are?
That's exactly right. What China does with our national debt doesn't have much to do with how much rent you can charge. When you buy a house, you just need to know what people will pay for rent when you buy the house before you buy it. That's the number that's most important to you. So many people spend all their time worrying about what could happen, and they read all this international news. And in my mind, it has very little effect on my market. Now, if it changes the value of the dollar can either go up in value or down in value. I tend to think we're going to have some inflation, so the dollar will go down in value, but that makes my real estate more valuable, and it makes the debt that I owe less valuable, so I can pay it off with cheaper dollars. So, there's different ways to look at things, but the people that seem to make a lot of money in the world don't spend a lot of time worrying about something that probably isn't going to happen. They just every day have they have opportunities they're looking for. They execute, they buy those opportunities, they rent properties and keep them full, they manage them well. And, I know guys who have made literally many billions of dollars in the real estate business, and they did it just one step at a time. These guys started off broke, and they've made billions. Well, that's more money than I'll ever see. It's more money than I want, but they've done it systematically in one lifetime. And, in spite of everything else that's happened in the last 40 years.
So on one hand, it's certainly good to keep an eye open for the global view and know that, make sure you're in a good position. So if you black swan comes along, you got yourself somewhat defended or in a decent position. But on the other hand, you don't want to be so scared of everything you hear. You go crawl in a hole and to avoid the hail, and you've missed out on all the opportunities you could have been doing.
Yeah, 90% of the people don't have much money. So if you don't have much money, what are you worried about? If you're laying on the floor, you don't have very far to fall. Now, if you've got $10 million, then it's a different discussion, and I'm happy to have that discussion with you. And you should have diversification. You should own things free and clear. You should have some cash. You should have some other things. But if your net worth is under $100,000, you just need to make some more money.
maybe plant a garden or something along with it. That's where you are. Yeah, well, we certainly are seeing change, and I think that's pretty good. I like that advice. I just got off a 9-day conference with some pretty experienced folks out in the world, and I didn't find any of them that didn't think that inflation is inevitable, and that indeed hard assets like maybe precious metals and agricultural and oil and gas, but certainly houses where people have to live are a pretty good hedge against inflation. We're going to be back here in just a moment. We're fortunate enough to have with us John Schaub, who's on the phone calling in from Florida. We have Michael Morrongiello here in the studio, who is here with who's the director of the Bay Area Wealth Builders. John is going to be out here in a week to be at BAWB and also put on a one-day show on April 19. Don't miss that. And also, John was with us last week talking about fundamentals. So be back with us in just a moment on KDOW 1220 AM, Wall Street Business Network. This is Tom K. Wilson on the Real Estate 360.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Thanks for staying with us. We've got special guest John Schaub with us today, calling in from Florida, and Michael Morrongiello, who's here with from Bay Area Wealth Builders. Both of them investors, and for a long time, John Schaub is a long-time investor and a great educator, written several books, most famous of which is Building Wealth One House at a Time. And very lucky for those who are listening live. John will be in town and will be at BAWB tomorrow night. And on the 19th on Saturday, he's given an all-day, one-day class. He doesn't get out here very often. Don't miss it. We were talking before the break about how marketplace is something you got to keep an eye on. But while that's going on, don't get yourself frozen and totally inactive and paralyzed. Just keep on doing things that make good sense. And if you get products that produce cash flow today, not speculatively, maybe hopefully someday, and gambling on speculation, then you'll have a hedge against probably inevitable inflation, and have yourself cash flow, which you'll build toward retirement. What else can you add to their changing marketplace? What do we do? What do you tell investors to do differently today than they did 10 years ago?
Well, one thing I tell them to do is borrow some money. It's I've never seen cheaper interest rates. These are, in my 40-year career, these are the lowest rates we've seen, and I think they'll change. They did a survey at the Federal Reserve Board of Governors here last month, and I think 17 out of 18 of them expected the federal funds rate to go up 4 points. Well, it's 4%, not 0.4, but 4% here in the next couple of years. So I think we'll see rates move up, and that is a reflection of inflation in the economy. I'm a lender, and if I'm going to lend you $100,000 for 10 years, it's not going to be at a low interest rate today because I expect rates to go up. So it's a natural connection between the value of the dollar being less in 10 years and the lender wanting a higher return on his money. So if you the reason today is an excellent time to buy is, number one, the rental market is strong. Two, you can borrow money at lower rates than normal, certainly lower than most of us have ever seen. And three, it's a safe time to buy because we're on the upswing of the market. It's nowhere near its peak, but it's taken off. So we're going to see prices and rents increase pretty dramatically, I think, over the next 5 years.
Aside from, I know you like to manage your own property, so therefore it should be in your own area. For those who are willing to have the confidence in investing in another area because they have confidence in the management that's going to manage it, like properties that Wilson Investment Properties sells in Dallas that have management on it, how would you tell people to choose the metro that they're in and the product? Most the metro for now, because we got maybe about a minute and a half on this segment.
Well, if you're not going to invest with a company who's going to manage it for you, if you're going to invest and manage it yourself, I think it really pays to have it as close to you as possible. I've owned property in 10 states, and I've always done better when I manage my own property. So if you can hire a responsible management, that's a great thing. But make sure that that's what you're doing. And if you're going to manage it yourself, it's foolish to be far away from the property.
But if you have confidence that the management company is a good management company, how would you choose the cities to invest in?
How would I choose the cities?
Yeah, how would you choose where to invest in?
Cities that have the best potential for long-term growth, and that doesn't mean the ones that have moved the most here in the last 30 days. I'm looking at long-term demographics, trends, where people are moving to, reasons for cities to be there. So you're looking for healthy government structures, places like Texas and Florida that have relatively low tax structures, and places that people are going to move to here over the next 10 years.
John, I would assume that jobs would also be on that list too, because where there generally is good job creation, there's usually movement in property values. We're seeing that in Wyoming. We're seeing that in Texas. We're seeing it in some of these oil states right now. Would you agree with that?
Sure, and people move for jobs. I mean, that's probably the primary reason that people pick up and go someplace. I kid, that's why builders all drive pickup trucks. So when the building market collapses here, they can put all their stuff in the back of the truck and drive to Texas, where it's still moving. The people move for jobs. The big retiree movement, which we're going to see over the next couple of years, is going to come. I think they're going to move for weather and cheaper taxes. So if you live in a place where the weather's decent and the taxes are cheap, I think people are going to move into your town.
Yeah, it's another reason I like the southern part of this country. We have with us today John Schaub, who's calling in from Florida, longtime investor, great educator. He's going to be out here for a one-day seminar on April 19. If you happen to be listening live, if you aren't live, make sure you catch last week's podcast, as well as this one. We'll be right back. Tom Wilson, KDOW, 1220 AM.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Thanks for coming back. We've got 2 for 1 today. Michael Morrongiello and John Schaub with us, longtime investors, talking about what things we might do the same, what things we might do different in this kind of marketplace. So John says don't get paralyzed by all the dynamics that are going on out there. Keep investing in places that make sense. And if you invest someplace outside of where you live, make sure that you're confident with the people that are helping you, with the team, and that the management is very good. You believe inflation is inevitable, right, John?
I do. The way we govern ourselves is that we promise more benefits than we collect in taxes, and the only way to produce that result is to inflate the dollar. And we've done it for as long as I've been alive and longer. So I predict that the next 50, 60 years we're going to have inflation again. It's not the same every year, and it's not always runaway. But the average will probably be 3, 4, 5% over the long run. And that really helps you if you own a hard asset like real estate. It produces income because both your rents and your prices are going up at compound rates at those rates during that entire period.
As long as you have fixed debt.
Well, as long as you have
especially if
you
have fixed
have
debt.
A partner. You want some way to buy it, and so you're absolutely right.
Yeah, good. And so, to what degree, since rising interest rates will mean that our own government then will have to pay higher debt service on the ridiculous debt that we've accumulated, and will get them in trouble, to what degree do you think political pressures will keep these rates from rising too fast?
Well, as the government has to borrow new money, they'll have to pay higher rates.
Right.
The money they've borrowed so far, if you look at what a 10-year Treasury bill or a 30-year Treasury bond is producing, it's a very low interest rate today. That means all this 16 trillion or 17 trillion, however deep in debt they are right now, that's financed at 2 or 3% or less. That's been a pretty smart move if you think about it. I mean, it's better to borrow money at 2% than at 10%, right? So they finance all this debt with long-term loans now at very low interest rates, and that's what they're using to stimulate the economy. And they're going to pay it back with dollars that are worth probably 50 cents on the dollar here in 10 years. So if you're running the country as a business, you might say, well, maybe they're not as dumb as they look. But the new money they have to borrow as rates go up is going to be costly, and that'll probably bring out a change in political will about the willingness to borrow more money, because if they have to borrow, let's say 5 years from now, they have to go out and borrow $1 trillion at 10%. That's going to cost them a whole bunch more money than the bonds they have out today.
Do you think there's some risk that we may lose the position as having the world's primary reserve currency? No.
I travel the world on a regular basis, and I can tell you every place I go, people think the United States is the place to invest, and the proof of the pudding is this is where they bring their money. People from South America, from China, from Australia, from Canada, from Europe, they all think our currency is more stable and our real estate is a better place to have their money. And the proof in the pudding is you talk to somebody in the brokerage business, and they'll tell you about how much they're selling to folks from out of the country. And there's all sorts of people moving here. And the other part of that is our prices are cheaper. I mean, the Canadians that come down here and buy think everything's on sale. And this is not due to some currency devaluation. This is due to prices being higher in Canada than they are in the United States. And the same thing's true in Australia. My daughter is in the real estate business in Australia. And, a small house in Sydney will be $1.5 million. And I'm talking about something that will sell for $5 million in Sacramento.
Yep.
So it's or not $5 million, $500,000. I went the wrong way with that. So
Good stuff, John. We'll be back in just a moment after this break. We've got John Schaub from Florida with us on the phone, and we have Michael Morrongiello here in the studio. This is Tom Wilson with Real Estate 360 KDOW. We'll be right back.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Welcome back. Mike Morrongiello in the studio with us today, and we have John Schaub, who's on the line. Longtime investor, longtime educator. Don't miss his one-day seminar if you're listening to this live on April 19. And also, it'll be an evening at BAWB with Michael Morrongiello's organization up there. So we've talked a little bit about the big global perspective, and I think, John, if I'm not putting words in your mouth, I think you say it warrants watching carefully because it all does affect us, but keep an eye on it, but make decisions based on what things make sense in whatever local region that you're investing in.
Well, the best defense you have against any kind of calamity, I don't care if it's world war or natural disaster or anything else, is to have a lot of money. If you don't have much money today, again, you don't have no reason to spend a lot of time worrying about what might happen to you. Get some money, make some deals, acquire some real estate, generate some income, and then now you've got a reason to worry. But United States real estate, specifically California real estate, has been pretty solid. We've had ups and downs, but as far as if you track where it's been for the last 50 years, that's where you'd want to put your money.
Right, and Texas is a strong state, and Florida has been I think a pretty solid state for investing.
Well, the whole United States has been pretty strong. Now cities have ups and downs, but if you know your city, one of my more successful students lives in Detroit, and he had just cleaned up the last couple of years because people have been literally giving stuff to him that he rents for $1,200-$1,400 a month. So you get a free house and rent it for $1,200 a month, you're doing okay.
That works as long as it's managed correctly, right?
Well, he manages. So
yep.
Managed.
Yeah, there's no better manager than yourself if you know what you're doing. Just when you get to a certain point and accumulate a certain amount, then it gets a little tougher, and you might need some help if you want to do something else.
Oh, sure. I've got one student who's got over 1,000 houses, and he's got a staff, but managing people is what the game is.
Yep.
You're either managing people that manage your property, or you're managing the people that live in your property, but you're still managing people. It's not the real estate that causes you trouble, it's the people that cause you trouble.
Got that right. Let's talk a little bit about other ways to invest in real estate. What about paper? Michael, you want to lead this off a little bit?
John, I know you. One thing I admire about you is you do diversify. You preach diversification, and there are some people that, quite frankly, they don't want to own property. They don't want to manage. They want to get into maybe sort of they want income, they want some growth, but maybe for the folks listening in, you can talk a little bit about your philosophies about a paper investment where somebody might hold a mortgage or receive income off a mortgage or a deed of trust versus the actual ownership of the property and some of the distinctions between the two.
Sure. Well, once you understand real estate, and that, I think that's the first step, because if you're going to make a loan to somebody, or you're going to buy an existing loan that's already secured by a piece of real estate, you need to look at the real estate to make sure that if they don't pay you, you're going to get some money back from some other source. Hopefully somebody else will buy this property from you. So that is step one, and I tell people not to buy a note or lend money on any type of property that they aren't willing to own, because if you do, it puts you in a very, very weak negotiating position.
That's pretty solid advice.
Yeah, so it needs to be somewhat safe. But we have about 25% of our assets invested in paper at any one time. Paper produces a lot of income. It produces no growth. So if you think the economy is going to have inflation over the next 10 years, you wouldn't want to have 100% of your money in paper, because it produces no growth. Your dollars that you're getting back are going to be worth less 10 years from now than they are today. So you'd want to balance a portfolio of at least 50% real estate and 50% paper if you have some money to invest. And the best paper that I've have is paper I've created by buying a property and selling that property and carrying back a note. And I like that business because it's a safer transaction in my mind, because I know the property. I won't buy something that's not in pretty good shape and in pretty good neighborhood. I'm not going to buy a junky house in a junky neighborhood, bad part of town. So when I sell it, I know the house, and so I know what my collateral is. And when I sell it to somebody and carry back a note, I get to select who I sell it to. So, I get to qualify them. I get to meet these people. So it's a safer transaction in my mind than going out and buying a note secured by a house that I've never owned and owed by somebody who I don't know. Those are two kind of unknowns to me. So I'd rather be in control of it. But there's certainly the other side of it is there's always folks who would love to borrow some money to buy real estate. These are investors typically who know what they're doing, who are good managers, who are willing to do the work. So if you have money in the bank and you don't want to manage properties yourself, you don't want to own properties yourself, you will find that if you can get connected with the right people, that there's folks that can put together deals for you where you can invest $50 or $100 or $200,000 in a property and maybe get an 8 or 10% return in today's market, which is a better cash flow than you typically get off of real estate. But understand, you're not getting any growth. You give somebody $100,000, they give you $100,000 back. You don't get more than $100,000, but you get a lot better return on that money in the short run than you do in most real estate.
Yeah, that can work out very well, as you said, for both parties. Somebody that is a little bit more passive, that doesn't want to be as hands-on with the ownership and the things that go along with that, with the property itself.
What's your experience, Michael, with it? You do a lot of that.
We like a lot of paper deals, but I echo what John's saying. As I love doing both. I think that they match together very well. I would also, and I think John would agree, is that it's better if you are going to own the paper to somehow own it where it's more tax deferred or tax free in that kind of environment, because it's more taxable if you get the interest coming in. And so there are some ways to structure your transactions so that can be good for you as well.
Absolutely. Taxes, the only cash flow you get to keep is after-tax cash flow. And, if you've never made a lot of money and never paid much in taxes, you haven't paid attention to how the tax system works. But it's got to be part of your education. And, the first 25, 30 years we were in this business, we paid no taxes at all because we continued to acquire property that had depreciation, and we acquired it with leverage. So every new property we bought actually produced a loss from a tax standpoint, and that would offset the profits we had on properties that we'd owned for 15 or 20 years. So,
well, from an after-tax standpoint, that makes a lot of sense. Yeah. We have John Schaub with us today and Michael Morrongiello here in the studio. We'll be back to wrap up in just a moment. This is Tom Wilson on KDOW, 1220 a.m., the Real Estate 360 program, and we'll be back with you in just a moment.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
What a treat it's been to have Michael Morrongiello in the studio today to help me co-host our good friend and person we highly respect in the investor and education world, John Schaub. It's been a great having you with us, John, for 2 weeks in a row here. We look forward to you being out here for the class and at BAWB.
Well,
any kind of last little takeaway nuggets here for our listeners?
Well, I'm optimistic about the short-term future. I won't say for 50 years, but for the next 5 years or so anyway, for a couple reasons. Number one, the people outside this country continue to invest in the United States, and that's bringing a lot of money into this country. 2, our interest rates are low, so still a great time to borrow. The rental market's getting better and better, so you can buy properties that will produce cash flow, and you should. You should buy properties that produce cash flow. And, the economy itself is on an upswing. So it's all good news. It's a safer time to buy now than it has been for the last 7 or 8 years. So if you're just getting into the market, this is a great time to get in.
You'd say it's probably might even be the best window of opportunity for many people for the rest of their lives.
I would say so.
Yeah, I can't. All right, that's a good wrap-up note. Michael, you have any last kind of comment or wrap up before you tell them about the events coming up?
I would echo what John's saying, and that is that with these rates where they are, they're historically low. If you can either structure your deals with this kind of financing or get financing through traditional bank lending type lenders, it's phenomenal because we've not seen these kind of rates in many, 50 years, I believe, historically. So, yeah, it's a tremendous opportunity. And if you like, what you're hearing with John and some of the philosophies and the wisdoms that, he's imparting here, we'd love to have you come out and visit with us. John's going to be visiting the Bay Area. He's going to be here on two visits, Thursday night, the 17th of April in Corte Madera at the BAWB, the Bay Area Wealth Builders regular monthly meeting. He'll also be doing a full-day event on the 40 years of profitable deal-making, and that is a class that he's going to cover a lot of ground. There'll be something for everybody throughout the day. He'll be talking about how to generate cash flow 24/7, the things he's doing to do that, some of the negotiating secrets, which really is a $10,000 an hour skill set to have, of how he negotiates with folks, what he's doing in this current market to generate deals and the profit centers that he sees. And he touched on it a little bit, I think, here today, and that is how to retire sooner and with more. We'd all love to do that, wouldn't we? So we'd love to have you visit. And John's class on the 19th of April is at the South San Francisco Conference Center. And for more information on how you can find out about that class or about the meeting, you can go to our website, www.bawb.info. Again, that's www.bawb.info. Or you can call the information line, which is 707-996-6411. Again, 707-996-6411. And really catch John while he's here. He's tremendous, and he's just a great guy to listen and learn from.
John, thank you so much for being on the program with us.
Don, it's my pleasure. I hope to see you soon.
All right. Have a good trip out here. And if you want to get a weekly newsletter on the economics picture of what's going on and how it affects real estate, you can sign up on TomWilsonProperties.com. Also get a report on how to choose the best metro and product to invest in. And anytime you have questions for Real Estate 360 and Tom Wilson, give me a call, and we'll be glad to talk to you. It's been great today having you with us on this very special program here on KDOW 1220 AM. We'll see you next week.
You're listening to Real Estate 360 on AM 1220 KDOW. For more information on today's program, visit RE360radio.com. That's RE360radio.com. AM 1220 KDOW.